In this video, I want to continue the conversation around a shift in mindset. Not just I want to get a policy on my child, but I want to get a policy that is actually for my child. And what I mean by that is this, we're not just talking about adding something to a parent's policy for a small amount of coverage, just in case something will happen. We're talking about a policy that is specifically for the child, one that stays with them into adulthood and eventually becomes their own. So let's look at what that could look like, okay? When we're talking about juvenile policies, we're usually talking about whole life. And that whole life is not term, of course. Term is for a set period of time 10, 20, maybe 30 years, then it's gone. Or you can convert. But whole life is different. It's designed to stay with them as long as it's kept in force. And with many of these juvenile policies, we're looking at children 15 days to 17 years old. So you can get it as early as 15 days. That's awesome. At 18, that ownership can be transferred to the child. So now it becomes theirs to manage. And that really matters. And it matters because we're not talking about just temporary coverage. We're talking about something that they can carry until their adulthood that can benefit them then as well as their family and descendants. These policies can also build cash value, but hold on. We're not talking about something that's designed for a retirement strategy. We're not talking about IULs, although there's child IULs we could do, but that's not what we're talking about. So let me be clear about that. We're not retiring off a child's policy. What we're doing is we're putting something in place to guarantee their death benefit, so a little cash value, and certain living benefits. One of the biggest benefits is guaranteed insurability. And what that means is if the child later develops a health condition, they still have coverage in place. And at certain points, when their policy allows, they'll be able to increase their coverage amounts without having to go through that underwriting where that issue could become a problem. And that's a big deal because if something changes later in life, they don't have to start from scratch and they don't have to worry about will they qualify for coverage because it's already guaranteed. Another feature is accelerated death benefit for terminal illnesses. And so what that means is if there's a terminal illness that is ever diagnosed, a portion of that death benefit can be used for those medical bills. You can even use that for a let's spend these last moments together doing something special time. And so that's awesome. And then other benefits that carriers could include could be common carrier accidental death and family health benefit riders. Now let's look at a simple quote example so you can see what this might actually cost. All right. And I'm going to use my baby girl as an example profile. She's 9, female, of course. And we're going to use Forrester's Financial for this example, just one of the many carriers that we can have a look at. And for this option, looking at their juvenile policy, we're going to use their max, which is 75 for the initial face amount, so 75,000, and we're going to look at the 100 pay option, which is just pretty much spreading that across the lifetime, and that's going to be $33.99 a month. Okay, so about for $34 a month, all right, you're going to be able to get 75K in death benefit for your child, and that's guaranteed plus those living benefits plus the guaranteed insurability. And then at 18, this policy becomes theirs, and now they can manage it and do what they want. They can add at those milestones so that their family can be taken care of should something happen to them, as well as the cash benefit that is there. They can use those at those milestones to do whatever may be needed, whether it's finances or school. So there's such a great advantage to this, and so again, we want to make sure that parents were thinking differently about this. It's not, let me put something on my child. We are getting something for our child. And this is for parents, grandparents, any legal guardian will be able to do this.